Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video, we're going to be doing a brief stock analysis on STOR Capital stock, ticker symbol STOR. And this is one of the two REITs that I do own in my Roth IRA for tax advantage purposes there. And so in this video, we're going to kind of talk about the company as a whole, how they see themselves differently from other REITs, and look at, some of the statistics about the company, just like what kind of real estate they own and some stuff like that. That's pretty interesting. And then we're also going to look at the third quarter 2021 results, which are their most recent results available. And we're going to look at some dividend metrics, look at some valuation metrics, and also take a look at some sort of chart to look at the valuation per se from more of a technical level. So the first thing we're going to take a look at is kind of an overview of their business. The STOR Capital actually stands for Single Tenant Operational Real Estate, so that kind of describes what they do. And they explain here there are three different payment sources compared to most other commercial real estate assets that just have two. And it's a little bit convoluted, especially for someone that maybe isn't an expert in real estate or, kind of business financials, I guess. So they say they're distinguished by their primary source of rent payment, which comes directly from the profits produced by basically the tenants of their business, which is kind of interesting. They refer to this as unit level profitability. And I guess the big takeaway for me is that big takeaway from this paragraph here is that before they invest or, are going to take on a tenant basically, or buy a property that a tenant is currently in, they review the profitability and they look at the financial statements of that specific tenant in that specific location. And essentially that just helps them make a much better investment decision. And then they also have this, basically they say that tenant credit quality is also another, payment source, because if the location is not profitable or not as profitable as they would like, then they can use the tenant's credit quality, if they have a high credit quality, to be a source of payment as well, if that makes sense. And then the other payment source obviously is just going to be the residual value of the underlying real estate. And so those three payment sources are, how STOR Capital makes money. And we're going to go through right now sort of a little bit of an overview of kind of, just some data about the company, I guess. So this was from around the this was from November 4th, 2021. So at that time, their share price was $35 per share, which has fallen a lot since then. But basically they own a diversified portfolio of 2,788 locations, which is worth about $10.3 billion as of September 30th, 2021. And they say the market for STOR properties is $3.9 trillion and includes more than 2 million properties. So obviously I don't think they expect to eventually own all of those, but it's just saying they have a very large market and still plenty of room to grow. And then they have some metrics here, and basically it shows AFFO, dividends, and net income. So all of those values have been growing at about 5 to 6% over the last 5 or 6 years on average, which is pretty awesome to see. And that is definitely a steady rate that hopefully the company can continue into the future. They talk about the dividend. They obviously, since they're a REIT, they pay 90% of their taxable income. And 70% of their lease contracts are of investment grade quality. So that's saying that their dividend basically is secure. And then down here, they talk about the actual asset class or types of real estate they invest in. So about 66% of their investments are in service locations, I guess, which basically means that a lot of these services are not readily available online. So, the e-commerce takeover of retail really cannot, hurt that as much. So they have like restaurants, early childhood education services, automotive repair, health clubs, pet care, lumber and construction materials wholesalers. So those businesses are pretty stable, people are always going to be using those. right? Their services, and they're not really going to be taken over by online, at least not for a while, I don't think. Then about 15% of their business is in retail. So they say that they try to have internet resistant clients. So they show Camping World. That's something that you can definitely buy online stuff, but a lot of their stuff that they sell, I think a lot of people would want to go in person to see sort of what it is. So furniture stores, recreational vehicle dealers, used car dealers, hunting, fishing, camping outfitters, and home furnishing. So a lot of that kind of stuff, people like to go in person to check it out. And then finally, manufacturing. About 19% of their business is in manufacturing. And they have the following industries: medical fabrication, food processing, plastic and rubber products, and automotive parts. So honestly, pretty diversified across those, different industries. And I like to see that manufacturing, like that is, something we're always going to have, I hope, in this country. And I hope we have more of it in this country. And like I said, they had about 2,788 properties as of September 30th, 2021. So the next thing we're going to look at is their Q3 results, basically. So they announced these on November 4th, 2021. And so for the third quarter, ended September 30th, 2021, they had revenues of $199 million. And I think down here they compared it to previous quarters. Yeah, if we look down here to where it's more detailed, so total revenues were $199 million for the third quarter, which was an increase of 13.6% from $175 million the third quarter of 2020. And then total revenues for the first 9 months, first 3 quarters of 2021 was $573 million, which was an increase of 10% from $521 million the first 9 months of 2020. And they said, which I found interesting, that the increase was driven primarily by the growth in the size of their real estate investment portfolio, which grew from $9.3 billion in gross investment, which was about 2,587 properties and 511 customers at the end of the third quarter last year, to $10.3 billion, representing 2,788 properties. So basically, they added about 200 properties over the course of the year, and that was worth about $1 billion. So net income was $75.9 million, or 28 cents per share for the third quarter, which was up pretty decently, about a third, I guess. So about 30% from 54 million, or 21 cents per share. And net income, definitely isn't quite as important, for a REIT, and something you often look at more for REIT is adjusted funds from operation. So for the third quarter, it was adjusted funds from operation were $140.3 million, or 52 cents per share. And for the 9 months ended September 30th, 2021, it was $401 million, or $1.49 per share. And both of those values were, up by probably about 5 or 10%, maybe more, from, the prior year's quarter. And if we kind of project this out, because one of the valuation metrics that people often use more so for REITs is price to AFFO instead of price to earnings, the general PE ratio that a lot of people use for a lot of companies. But for REITs, oftentimes people use price per AFFO. So we'll try to go ahead and calculate that. And if we look, they had about 50 cents of adjusted funds from operation in the third quarter, and about $1.50 in the first 3 quarters total. So we'll just estimate 50 cents per quarter, which gives us $2 of adjusted funds for operation per share for the year. And if we do the price of about $30 per share right now, divided by that $2 of AFFO, we get to about 15 for the price to AFFO ratio, which I think is pretty good and could indicate that it's a little bit undervalued, but we'll talk about that a little bit in the future. And also, they paid a cash dividend of about $104 million, $105 million on October 15th for the third quarter. And that was actually when they increased their dividend. So they increased it to 38.5 cents per share, which is about a 6.9% increase over the previous dividend amount. So that's pretty exciting, I think. And like we said, they purchased some properties. So like we were saying before, the first 9 months of 2021, they purchased about $101 billion of properties, which was about 236 locations. And for that same 9 months, they, sold properties and had gains of about $270 million. It says they sold about 82 properties in the first 9 months of the year. So they sold about 82 properties and they bought about 236 properties in the first 9 months. So that's pretty cool. Definitely good to see that they're, buying more than they're selling, because that's a good sign to them actually growing some. And we're going to scroll down here and try to find the balance sheet, which should be right here. Just take a quick look. So their total assets are around $9.4 billion, with the total real estate investments of about $9.6 billion. And so obviously land just alone is around $3 billion. Buildings is around $6.5 billion. So basically that means, like I said, real estate is around $9.6 billion of assets there. And then if we look at debt, I think their total debt is around maybe $4 or $5 billion. I don't see it listed here. Maybe I'm just missing it. I guess they sort of have it split out. So it says non-recourse debt obligations is about $2.5 billion, and unsecured notes is about $1.4 billion. But altogether, their total liabilities are only $4.3 billion compared to their assets of $9.4 billion. So realistically, they have more assets than their company is even worth. But since they have those debts, that kind of makes up for it. But overall, total stockholders' equity is $5.1 billion. We can see that has grown from the third quarter of the end of 2020, which these numbers are compared to. And total assets have grown as well by about $400 million just in those 3 quarters. So that's pretty cool to see. And we're also going to take a look at some of the dividend data. So the dividend yield right now is right around 5%, which is pretty awesome. I was actually looking, right now I'm recording this on Thursday, so I had a live stream last night on Wednesday, and I was kind of looking at STOR Capital and Realty Income and talking about them a little bit, and I thought STOR Capital's dividend yield was way below, or at least below a bit, Realty Income's dividend yield. But right now, STOR's dividend yield is up around 5%, and Realty Income's is only around like 4.25%. And the thing that I like about STOR, or at least one of the things I like about STOR over Realty Income, is their dividend growth rate is a lot better. Right now, their 5-year dividend growth rate is around 6%, whereas Realty Income is more around the 3 to 4% level. So that's one of the big factors that attracts me to STOR, along with their just smaller business size in general, giving them more room to grow. And they just seem like they have been growing pretty well. Obviously, they're a pretty new company, so they haven't had as much history of growing their dividend, only 6 years compared to 25 or between 25 and 27 maybe for Realty Income. But overall, I think the slightly higher dividend yield and awesome 5-year dividend growth rate, I wouldn't classify it as awesome, but for a REIT, it's pretty good, and it's definitely a lot better than Realty Income's. We're also going to look at the price to AFFO ratio. And so if we look at, these are, trailing 12 months forward. And I'm not sure what these other two are. Oh, this is just free or funds from operation as opposed to adjusted funds for operation. But we're just going to look at these two. These values right here are their, current values for the business. So around 15.5 to 16. And these values right here are the average for their sectors, I think, or the median for their sectors. So the median for the real estate sector for price to AFFO is around 20, whereas STOR Capital's is around 15 or 16. So from that perspective, you could definitely argue that they're a bit undervalued. And we're also going to take a look at the chart here on Thinkorswim and just try to look at it from a bit of a technical level. So when we go back on the 2 years chart, it doesn't look that great of an opportunity, but it also doesn't look that bad, because you can see basically over here is the March 2020 crash. So they were up around $38 per share before that, and then they crashed all the way down to $16. Looks like they hit a low intraday of $13 on March probably 22nd or something. I don't know where it lists the day, but let's see. Yeah, March 19th actually. But they kind of rebounded, within a few months, within like 6 months or so. And then since then, they've kind of been trading sideways. And the last few months, they've kind of been trading downwards a little bit. You can see they have a lot of volume here at 20, a lot of volume here at 25, 27, and 30, which is right around where they are right now. So if we zoom in a little bit to the 1 year, 1 day chart, we can see they're right around here, right around $30 right now, which is right around this larger volume area on this volume chart. And so, that is definitely a sticky point. But like we saw before, if it drops below that, it could definitely drop down to $27, $25 fairly quickly. But if we get above this level a little bit, we could go right back up. But for me, I've been buying some shares pretty recently just because of the little bit of a discount. And one of the things that I've really been watching for a long time on STOR Capital is this gap here. And back in November of 2020, which is probably when they reported their earnings, they basically gapped up from around $27.50 per share to around $29 per share, and they have not reached that level since. So the basic concept there is that I think the rule is, I guess, that generally stocks tend to like to fill gaps over time. So, at some point in the future, it's probably at least expected that we're going to get down to this gap and, fill that gap essentially. So I'm still kind of waiting for that. I was for a while, probably sometime back towards the beginning of 2021, just waiting for that gap to be filled for a while. And I was definitely buying some throughout that time, but I think it's definitely a possibility that we can get a few dollars lower at least, and that's not that unlikely to happen, at any point, I guess. So basically for me, I think STOR Capital is at a fairly good price right now, and I have been buying some shares over the last few weeks and months, and I'll continue to average in slowly as I see fit. And since it's in my Roth IRA, I have been reinvesting those dividends directly into the company whenever I receive them. So that's super helpful as it increases the amount of shares I own. But overall, I think it's a great company. They have some great financials, and I think the business is just growing pretty rapidly. I guess the one other thing I did want to mention was about the CEO. I didn't really even notice or hear anything about it until I was getting ready to make this video, but the CEO was Christopher Volk for a while. I think he might have been the CEO basically since they were founded, but in December he was actually terminated by the board, and they basically didn't give any reason for it. So there's a new CEO. I think her name is Mary, maybe. I forget what her last name is, but I thought that was interesting and that I didn't really hear about it, probably because they didn't want people to hear about it because it was, I don't know, maybe something scandalous going down. I don't know what happened, but they basically didn't say anything, so we don't know, but I thought that was interesting as well. So let me know what you guys think about STOR in the comments down below. Just want to thank you for sticking around to the end of the video, and I'll see you in the next one.